Hello guys and girls, welcome back to my YouTube channel. In today's video, I'm going to explain to you the number one strategy that made us enter at this buy trade yesterday with my students in my Telegram group, whose link can be found in the description below. Why do we enter this buy trade? Why the market was clearly on a downtrend. So if you've been struggling to know exactly where to do your analysis or how to do your analysis, when to enter a buy trade or when to enter a sell trade, then this video is right for you. Make sure you watch it until the end. So the pair was volatility 101S index, and as you can see, this market was clearly on a downtrend. And I know most of the books say that you should always ride the trend. That means if the market is on a downtrend, then you should also enter sell trades. If the market is on an uptrend, then you should only enter the buy trades. But why did we enter buy trade while this market is in the downtrend movement? So to answer that question for you, let us first do a recap and see how the market is supposed to move in a downtrend first. So the market is moving in series of lower lows and lower highs when it is moving on a downtrend just like this. But what makes it to say that this market is already over? What factors happen when the market is moving in a downtrend? They will tell you as a trader that this market has already ended with the downtrend movement. Can you answer that question for me? Well, the answer to that question is when the previous lower high of a downtrend movement is over, then typically that downtrend movement is over. And some people like it to call it to be a shift of the market structure, and it is a shift of the market structure. What is a shift of the market structure? A shift of the market structure is when the market that has been moving in a downtrend like this breaks the previous lower high to form new series of higher highs and higher lows. This is what it is known as a shift of the market structure. Now getting back to our charts right here, it can be seen that this market was moving, providing you a series of lower low, lower high, lower low, and the market right here broke this previous lower high right here, marking this area to be a shift of the market structure. So when this market, okay, traded above this zone right here, typically it told me that, okay, this market that was moving in a downtrend movement right now, it has officially ended. So this downtrend movement right now, it is officially ended, and this market, it is in a very, very bull run. So what we did, we just deleted all these things first, okay, and said that, okay, those bears that were hoping to keep selling this market, now it's the right time to exit this market because the bulls are coming very strong into this market. Unless this zone is broken again to continue with the downtrend movement. So as this market was moving to the downside direction, we said, where at the exactly point will it likely to return? And we said, let us see if there are presence of liquidity areas within it. If you have any questions on regarding to the liquidity, in the description below, I'll provide you with a link to the video where I explain in detail the concept of liquidity engineering. Make sure you watch it until the end. So we can see right here, this was a very good area where the market did provide us with the liquidity engineering. So this was a likely area for us to say that this market, when it comes to this point right here, it will reverse to this point right here. Why? Because this area is like the point where a liquidity engineering has taken place. And as you can see, the first conference that made us to be very strong bullish is the presence of this doji candlestick. Why? Because a doji candlestick is a reversal candlestick pattern. This was one of the most picture perfect trades, as you can see right now on volatility 101S index, as this market was moving in a downtrend. And at the bottom of the trend, we have a doji candlestick. So why won't you enter a buy trade? Because we have two conferences until now, the shift of the market structure right here, and at the presence of a doji candlestick, which all books of forex trading in the world, they tell you that a doji candlestick is a reversal candlestick pattern. So we said, okay, now up to now we have two conferences to ride this trend, but no trader, especially you guys I know who have small capitals, let's say of $100 account, of $10,000 account, you cannot possibly enter the trade on the daily time frame. You can, but it will limit you to open very few positions, because this stop loss this stop loss, my friends, it is very huge, and no trader in the world will enter into this kind of trade with a stop loss of more than 100 of pips. That will be not trading, that will be just gambling. So the only way that we said, okay, we know that this market right now is reversing. We know that this market is reversing. So what we did is we went to the 1 hour time frame to ride this uptrend. And again, if you want to ride an uptrend movement, then typically you have to know exactly how the uptrend market moves. Because as I keep saying on all of my videos, if you know how the market moves in an uptrend, then it will be easier for you to also to know where to buy that market so that you can keep riding it. So let us go first to the 1 hour time frame to see how the market is supposed to move in an uptrend movement, and possibly see why we did enter a buy trade with my students in my Telegram group, who of course the link to that Telegram group is in the description below. So if you want to join and be part of my Telegram community, please click on the description below, and I will appreciate so much. So after this is the daily time frame movement, you can see here the market was clearly in a region for quite some time, and this is just the way of the market trying to filter the orders to get the momentum or to get the appropriate volume so that the market can keep pushing upside. So this is just the way the market of filtering those traders, those traders who enter the market with no strategy, those traders who enter the market, of course, with no mentor such as me. Okay, so let us see how the market is moving in an uptrend. Market moves in series of higher highs and higher lows. Just simple. This is just typical the way the market moves. So the market will retest to this area if within this zone, after the break of structure, there are no liquidities. But you can see, if there are liquidities, then the market will come back inside to this area to take that to consume that liquidity before actually playing out. Okay, and again, I insist, if you want to get a clear concept of liquidity engineering, watch the video, whose link is in the description below. All right, now as this market was moving, we said, okay, here is a breakout. Here is our first breakout right here. Then the market came to form us with another breakout right here. So we say, as this market is supposed to move, providing us with series of higher highs and higher lows, where exactly will we enter into this trade? And we said, okay, as the market broke this structure right here, it ought to come to the inside this area if there are any liquidities. And we said, okay, we can see the market, the presence of liquidities right here before actually playing out. And we said, okay, here is a place where the market has consumed so much liquidities. You can see here is where liquidities are, and it is exactly where we entered our trade. And of course, this candlestick I usually like so much. I am in love, you can say. One of my first love, my first crush when it comes to trading is the presence of this doji candlestick. This doji candlestick is to me, is one of the most powerful candlesticks pattern to ever existed. I am in love with this candlestick. So after getting also this candlestick patterning, that was a very, very strong conference for us to enter into this trade, because we have now more than 6 to 5 conferences, and we just entered right here with our stop loss being very minimum. We can see right now the way we did a top-down analysis. If you had entered or on the daily time frame, then this would have been your stop loss, your whole stop loss right here, which it's not likely the way of a trader. You can see here the way we consume this area. We minimized this analysis to the 1 hour time frame. You can see how the stop loss is very minimum right here, just a few pips that even a person with a $50 account would have also entered into this trade. And guys and girls, that's how you are supposed to do your analysis. All right, if you have any questions, the comment section is free for you. And guys and girls, I wish you the best in your trading, and happy trading day. Bye bye.